Good afternoon. This is the video newsletter for buysellshort.com for Sunday, January 31st. We ended on a pretty negative note there on Friday. Sellers continue to dominate this market. Every time it looks like we're about to bounce, the tech stocks just get hammered and have led us sharply lower after the last few days. Fridays, we had the GDP for Q4 come out 5.7%, just a blowout GDP number. Big portion of it was inventories, but as we said before, inventories got so low that the first initial uptick in GDP was going to be rebuilding of inventories. So, no real surprise there. If you actually read the GDP report, there was a lot to like in the report. But again, pessimism abounds right now in this market. Everyone is on the sidelines. You've got shorts moving into the market right now. You've got nut jobs talking about the Great Depression still coming on the horizon, etc., etc., etc. No doubt about it. Thursdays and Fridays actions very, very disappointing. We had a very nice pop on that GDP report early on Friday, but sellers just used it as an opportunity to move in, and we ended up being from up 100 plus to down 50 plus going into the close. So there's just no way to argue that Friday's action was positive. It was not. Now, what we would really like to see is a nice little gap down tomorrow morning. That's been our problem over the last few days. We've had these big sell offs, and then the next morning we see buyers move in. We need to see sellers on the open and a big gap down, and then buyers come in. That is how bottoms are made. So hopefully we'll see that come tomorrow morning, but fingers are not crossed. Dow 15-minute chart, you can see, we just continue to tread lower, but we pull over to the daily chart and see here you can see the breakdown of the uptrend line. Next real resistance, you hear a lot of talk about the 10K level. Really, that's just a psychological level. If we take the July lows, which was the last big sell off that we saw, we had an 800-point sell off in the 3 weeks from mid June to early July, which is exactly what this sell off is feeling like. And we had an 800-point drop there. We're going on 700 points now on this current retrace. Similar sort of chart setup as well. Small little bounces followed by big down days. But if we go from the July lows to the recent highs, 38% Fibonacci retracement is the 9,700 area. And, that also marked the bottom that we saw back in late October before we went on this nice little 10 to 15% move that we've seen in November, December, and early January. So that would be our next level if we break the 10K level. RSI is getting way low. And one thing to note here, you can see stochastics. We are at a bounce point in stochastics. Again, it's just a matter of when and where we bounce from, but a bounce is coming very, very soon, in my opinion. So that is the reason we continue to sit high cash, nibbling on a couple of plays and waiting for the bounce. Yes, I hear the argument that I'm a permabull. So what? That's just how I play the market. And, going short right now, your downside versus your upside, yeah, if the end of the world does appear, you're going to make money. But everyone and their mom is starting to really short and move into this market and get bearish, which is really, really good in my opinion. And Kramer has been the one that said sell. I've never seen that clown be right on anything. So, just going off the Kramer indicator, we should be pretty close to a bounce. SMH, we are at the 50% Fibonacci retracement from the July lows. Techs have really led this market lower over the last week and a half. Nothing but very, very good earnings reports, and tech stocks are just getting hammered on their earnings reports. Apple, Amazon had a big pop, gave it up on Friday. Microsoft, great earnings, gave it up, etc., etc. Qualcomm guidance wasn't there, and that hammered the SMH stocks. So now we've got a couple of very strong support levels coming on the chart. We've got the $24 to 24.50 level is very, very strong support. We've got the 50% Fibonacci retracement support and the 200-day moving average, and we're deeply oversold. And typically tech stocks lead us down, namely the SMH, and they are the first ones to bounce. So that is what we'll be looking for as an indicator that we are in fact going to bounce. So SMH is what you want to look at. And again, similar thing, stochastics deeply oversold. Every time we've gotten down here, we've seen a pretty solid bounce off a low stochastics under 20. So again, we are monitoring the SMH very, very closely in the near term. Stock plays, not a whole lot of stock plays right now, but HYTM is one that we've been very patiently waiting on. Again, we've got that Blue Cross Blue Shield news coming Thursday evening slash Friday morning. Corporate Profile, that's the company that did the interview. The chart has been holding the 200-day moving average since that last big move. And the key thing to note, you actually go to corporateprofile.com, you click on the Hythium interview, go to minute 207. Right there, that's where the Hythium CEO says they are going to announce deals with Blue Cross and Blue Shield. You'll remember before when we got into this play with the previous interview that they said they were in talks with or with Blue Cross and Blue Shield. Now in the interview they say they are going to announce. So hopefully the fact that this got press released or PR'd by Corporate Profile, we can, assume that news is coming any day here, hopefully tomorrow. And when news comes with the chart that we have here, we're looking for a move to at least $1 on this one. This should go big on a news like that. Huge contract news. RSI looks pretty decent here. Stochastics nicely oversold, and this is where the stock blew up the last time. Stochastics were coming up through the 20 level when it went kaboom. Positive ADX cross, very nice volume, strong chart support. We'll be looking to accumulate this one, 45 cents and under. And again, dollar is what our target is on this one with the kind of news that we have coming. And this one looks very, very good with this hype coming up in the near term. So again, fingers crossed that we get that news tomorrow morning and we see that big boom on the stock. EEE, this was a trading alert from Wednesday, actually it was a Thursday, on big sell-off in this stock. Looks to its bottom, they've raised money. This big recent sell-off was the financiers, as is typical in small cap stocks, shorting the stock till the news came out. It actually got oversubscribed, they even sold more shares, raised $8 million plus in cash, cash risks gone. Nice little double bottom on the chart right here, and the first uptick in the market should see a very nice bounce back on this one to the 20-day exponential. That's currently at 40 cents. All the indicators nicely oversold, and the reason we like stocks that tank ahead of a market tank is typically they bounce big, and when you see the overall market tank, they've already had their sell-off, so they sort of pretty much stabilize. That's what usually makes them pretty decent plays. WAVE, Next Wave, tag this one as a possible play on the iPad. Remember, they're involved with the iPhone, had that big run back there in early January. Breakout is the 20-day exponential, 48 cents. But if you wanted to put a buy stop on this one, a break through 50 cents, every time the stock breaks 50 cents, it runs to at least 55 to 60 cents. So if you want to wait for that break, you can. We were being a little bit cautious on Friday, just going into the weekend, but chart looks very, very good here with 40-cent stops. Would look again to pick this one up on dips, 42, 45 cents. Chart looks pretty decent here, just waiting for news and momentum to come back in. Stochastics nicely oversold, positive ADX cross on the chart. We had a number of very nice short wins over the last few days. CTZN was another one on Friday. Got a big spike to the 75 cents. We were looking for 60 cents on the downside. Traded as low as 56 cents. But, take these quick. It's a chat room play. There's no way to send an alert out on some of these plays. Another one that we had earlier in the week, actually, let me scroll back a little, was FRGB, 75 cents. Looks like the Feds took this bank over this weekend, so this one's probably going all the way down to, 30 cents and under. So for you, those of you still short this one, very, very nice win on this one. Again, these regional banks, very hard to value them. Most of them are crap. And, one to look at is STBK, up massively over the last couple of weeks. And the Feds are digging into this one as well. So, taking banks home at night is a risky case, in my opinion. Last stock to keep an eye on long, EGHT. Another one of these tech stocks, great earnings, cash flow positive, hasn't done anything. We'll be watching this one for an ad on a bounce in the market. But going into this week, all the focus is going to be on HYTM. I think we're going to have a very nice week here, especially if the news comes. And that's it for the video. See you guys in the chat room tomorrow. Goodbye.